Good morning, everyone. Welcome to our Friday morning trading session. The end of another work week. I do that in air quotes whenever you hear me say the word work. It's a different kind of work, isn't it? All right. The NASDAQ, which is what we're looking at here on this particular monitor, still in a serious tailspin. Yesterday, the market, of course, made a very steady progression lower. They tried to recover a little bit in the afternoon or toward the afternoon. And then by the close and through the Asian session, they tried to push the market lower again. And relatively calm European session, but the market's still drifting lower. The reason I'm pointing this out to you is that we have a monster of an opening gap below the market here. It's like a good 20-point gap, 40 ticks, or pardon me, 80 ticks. So it's a big one. Not sure whether they're going to try to get into there or if the downward momentum is going to keep carrying the market lower. We'll have to give them a few minutes here and just kind of see which way the wind is blowing. We are getting an early signal here, both on the Hawk. We've got a first micro-macro cross higher, and on the Falcon we have our trend change signal. The Raptor also flirting with a possible buy. We do have a warning dot, but no follow through on that just yet. And of course we had the counter trend signal, the number 2 right here. So our target for a number 2 signal is always the hard edge. That's our first target. This signal developing just a couple of minutes before this morning's open. Well, I don't know. Maybe I'll try the Falcon here. What's this going to cost me? I'll just throw a single on it. We'll buy it. Oh, we got a chance to do a second push entry on this particular bar. So the second push entry simply means we allow the signal to engage, and then it retreats from the signal, showing us the limit of that current bar. What time is it? Oh, we're only 4 minutes into the session. I gotta have rocks in my head trying to trade it this early. Gaps, I find, are always tricky because they're inconclusive. You know, it could be what traders refer to as an expansion gap, which means we should just see the prices continue lower still, or it could be, a gap that the market's going to try to fill. Now, the market will fill gaps. I have no doubt that gap will get filled. I just don't know whether it's going to get filled today. All right, here we go. So I'm going to try to run this one out a little bit. Maybe we'll delete the profit objective. We're just 5 minutes into the day. Wow, February 24 already. then we would have had comparable signals on the Hawk and the Raptor as well as this Falcon signal. So you would be able to duplicate this signal on your other tools. Technically it is counter trend, which is another reason I'm trying not to get too aggressive with the trade. All right, if we can just see maybe the market stay above the primary support line here, I think we'll be all right. The good news, anytime you take a counter trend trade, the good news is that you know where to cover the position, right? There's no question in anybody's mind that the trade needs to be covered below that swing low right there. All right, well, we're getting above there. That's a good sign. Let's see if we can stay up here now. Come on, keep going. You're doing fine. Ay, 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 if we could just get a little bit of room from here. The seller's trying to really squash the buying. I would like to see at least a retrace back here to the median line. A move to the primary resistance would be amazing. I don't know if the bulls have that much in them today or not. No, they're really starting to flounder. All right, I think I'm going to force my trade to break even. And if they go, they go. I think they will go, but hopefully they're not going to stop me out first. Oh, get away from here. They're just taking too long, right? We've broken through here. I realize the market needs some time, and I do believe it will go higher now that we're above the primary support, but we're just barely up there. not having a whole lot of patience with the trade. Come on. Tom's asking, Eric, where exactly is that gap? Which bar? Okay, you're not going to see it on a 24-hour chart because the 24-hour chart obviously plots bars for 24 hours. But if you go back here, I'm on Pacific time, so the market closes at 3:15, or pardon me, 13:15 my time. So that's going to be right about here. All right, it looks like approximately 53.50 is the price that the market closed at. And we've opened 6:30 Pacific, which looks like it's somewhere right around here, around 53.08. So there's your gap. There's your gap right there. Now, if you want to make it easy to spot the gap, then I'm going to hold on a second here. I'm just going to leave this back at break even. There we go. If you want to make it easy to spot your gap, then all you need to do is run a chart that has the regular trading hours on it. Sorry, you can tell I don't multitask very well. My wife will tell you that. So what you can do, if you like, you can just build yourself another chart, maybe like just a regular time-based chart. NQ, there we go. And we're going to just do a regular minute, I don't know, let's do like a 15-minute chart. And you can use well, let's see if the instrument settings do it. Maybe the instrument settings. No. So the instrument settings actually show the overnight trading. So what we're going to need to do on this chart we go to our data series, and you can do this on your Falcon chart too if you like. Session template 24/7. We want CME US Index Futures regular trading hours. And what I'll do is I will put in a daybreak line so that you can actually see it. And if that's too dark, go back to your data series, and maybe we'll make this daybreak line, instead of a solid line, we'll break it up a little bit. We'll make it a dot so it's less conspicuous. There, that's not so bad. Okay, now you can plainly see the gap every morning. Well, sorry, not every morning, but when the market gaps, you can see, okay, there's a pretty big gap right there. Last few days, the market very, very sideways, no real gaps. Oh, is that all I got? I need more data. Little itty bitty gap here. Oh, no, sorry, it was a bigger gap because the market opened up here. That's right. So there was a bit of a gap on that day, a little bit of a gap on this day because the market opened down here, left off over there. So you can see it's quite simple. If you plug in the right hours that you're trading. Otherwise, all you need to do is just pay attention to where the market closed the night before, approximately. We don't need to worry about absolutes. And approximately where it opens, and then you'll have a rough idea how big of a gap we have. Okay, so we're at our first profit target. I think we just, yeah, there we are. We're at our first profit target. I should have taken 2 trades here because I really, really would like to try to run this one out. But you know what? Maybe I should just take the money. 100 was such a nice even number. Yeah, see, if I had the parabolics in play, I would have been stopped out at my profit or my high probability profit target. Now I'm kind of committed to trying to ride out the swing. I don't know if this stop is going to be far enough away, though, to allow me to ride out the swing. Trying to get back now to the primary support line before the buyers decide whether or not they're going to try to rally the market up again. No, you stinkers. Get up there. Okay, a little bit of buying going on now on the primary. Gold going into a major decline this morning. Just 1 second, I'll bring up the gold chart. Here's gold on the Raptor. And we had a number 2 signal here. Now this one did not print because this retest was not high enough. So you can see that number 2 signal actually had some really, really good follow through to it. This is a situation where I would go into my Raptor and I would check my settings. Maybe I can tweak my setting a little bit to let the Raptor, help the Raptor find that particular signal. All right, so here's the soft edge signal, that's the number 2. The sensitivity is set at the default of 1, so let me dial it up a little bit. and see if that doesn't change things. There you go. All right, so I've changed my Raptor. I've gone down here to the pre-signals, the soft edge signal parameters, and I've changed it from the default 1.01 to 1.25, and it looks like it's going to do a little better job of picking up some of those signals. Now, you should have still recognized it as it was unfolding, but it's nice to have the prompt. So we've increased the sensitivity of the gold Raptor. Oh, wow. I actually wrote out that swing for the time being. Now, if I were smart, I would probably look at taking that profit target. I'm going to sell, and we're going to, there we go. Oh, are you guys going to let me take profit up there? All right, let's go. Let's work on that. Come on, get up there. Tom is asking, good question here. Tom asks, is the ask bid indicator essentially the same as the Geiger counter? Well, yes, in a way it is. These bid ask values, those are the same as what you'll see here. The Geiger counter also has the histogram, so you can see when big blocks of buying and selling are going through. It does have the bias needle, which kind of shows you which way the market might be leaning at the moment. The thing I like about the Geiger counter is this dial here. So when you see this dial pull hard to one way, now you will see the bid ask do the same. You will see how the dial is kind of pulling. There they go. They're trying to pull to the buy side a little bit, to the ask. But yeah, it takes the same information and plots it on the Geiger counter. Following the bid ask can be a little bit tricky. Oh shoot, they're gonna tag me here at break even now after all that. Floyd watching the euro says there's a great move going on in the euro right now. Hold on one second and I will see if I can't get a euro chart over here. So here's the euro now on the Raptor. Wow, Floyd, you're right. Big move lower. Pretty decent move higher as well. little bit of sideways congestion yesterday. Oh, a slight upward rally through the overnight. Yeah, so it looks like today's move, really the most active of the last couple of days anyways. Okay, hold on here. David's got a question about the euro. Just one sec while I get that euro chart again. Well, it's a good thing I'm distracted doing other things because this might well become one of my luckiest trades ever. Look at that. They got within a tick of my break-even trigger, and now they're trying to put in another rally. I'm really starting to wonder if I should try to run this one out a little bit more. No, don't be greedy. I'll be happy with the profit target once I get it. If I were running multiple contracts, I probably would try to nurse it a little bit higher still. I haven't got my profit target yet. I shouldn't get too cocky. All right, so David is asking on the euro, would you have gone short at the 2 hash marks, way at the top, or at the red down arrow? Let's get back here. The 2 hash marks way at the top. So are you talking about these hash marks, David? If so, no. Would you have gone short at the 2 hash marks? This would have been, you can't see it very well because it's obscured a little bit by this line, but there's actually a triangle hash mark printing right here, right on our resistance line. That's where the number 2 signal developed. So I would have been interested probably in shorting around there. You know, once you got the number 2, it kind of confirms that, yes, we've had a test of the extreme. The market looks like it's trying to fail. We should anticipate a retrace at least to the hard edge. This one, as you can see, went much further. So I would have looked to try to short from here. Again, counter trend signals, the only advantage really to a counter trend signal is you know where to cover it. You know that if the market trades back, if it breaks through 106 100 and it trades back here through 106 250, you're on the wrong side of this trade. There's no question about that, right? So that's the only good thing about doing a counter trend trade. In all honesty, I probably would not have gone in for 2 contracts. I probably would have only traded a single. We did get a teeny tiny retrace here in a number 1, and that's kind of what we're working on now. It's going to develop probably into a more proper cloud crossover signal. Oh, I see. David said I said wrong. I meant the hash mark here at 619. Yeah, this one's a little bit late. If you miss this move, then what we're on the lookout for now is a cloud crossover. So, oops, push the wrong button. Now we're going to look for the clouds to cross over, the market to retrace into the clouds, and then be rejected coming out, and we're going to look for that signal in there somewhere. But yeah, the resistance line is obscuring the actual signal. Now, you could have shorted here. There was no reason to short other than the Raptor was producing a signal. Generally, I don't just do the random signals. If you wanted to see how just every single Raptor signal performs, and you happen to have the Profit Finder, it's really just a very simple matter of running Profit Finder, and it will tell you the performance of every single Raptor signal if you took every single signal. Here, we're going to do it just really quick, just for giggles and grins. Where are you? Oh, Profit Finder down here. Profit Finder. So what I've got is it's going to calculate on the arrows. I do need to set my market hours. Yeah, okay, let's do it this way. All right, so if we took every single Raptor signal, as it produced, we would end up with a $42 profit. And what's my data series here? This is over the last 3 days. That's why these values are so low. So over the last 3 days, if we took every single Raptor signal, we're not talking about just our high probability signals, but rather every single signal, we would have had $812 profit, $770 in losses. We would have banked $42.50. Our win ratio, look at this, is actually fairly high. This is what people don't understand a lot of times, is that a high win ratio doesn't mean you're going to make a lot of money. We're running 60% profitable on our trades. And it's almost an even split. Nearly 60% on the longs and nearly 60% on the shorts. So why are we losing money? Why are we dumping $770? Well, probably our stops. Our stops will have a lot to do with it. Maybe it would improve if we're using break-evens. The max drawdown was only $210, so that's very reasonable. But you can see the average trade only worked out to $1.63. Does it say number of winning trades? Total number of contracts traded, 26 trades over the last 3 days. So now if you have your Profit Finder, what you can do is you can go through it and you can start to make adjustments. You can say, oh, all right, well, what if we did, and you can go find your stop strategies. So right now you don't have a trailing stop of any kind. What if we did parabolics on everything? And the key to doing this is only to make one change at a time. If you make too many changes, well, you're going to not know what's working and what isn't. So now we have parabolics running as a stop, and you can see things got worse. This is because we're taking too many signals. If we focused on just the high probability signals themselves, if we went through and highlighted those, these numbers would be much, much better. But that's a fun exercise to do with your profit finder. I call it the trader's video game because it gives you a chance to tweak your charts. You can tweak for the current market conditions. And really just optimize your chart for the market. Yeah, my trade worked out. David says, lunch is on, Eric. Okay, everybody come on up. I think I've got some sandwiches around here. Peanut butter and jam for everyone. Clayton, nicely done. Clayton says, I got into that trade late, but got in and ended up with a positive $145. Nicely done, Clayton. All right, so the market did get up here, did find our profit target, hooray, and a little bit of a reaction now to the median line. And I'm glad I did not try to run it out again. If I did, let's say I was being silly, where was my signal? My entry was 53.11. So down here we bought. If, for whatever reason, I decided to try to ride out this swing one more time, you know, thinking maybe, just maybe, they're going to get up to the primary resistance line, at this point right here, I would have rolled my stop. So I would have taken my stop from its break even, I would have rolled it up here, and I would have been stopped out with about 100 and change. But fortunately, the market did give one more little push up and hit our profit target. Hooray for us. And yes, that one's going in the books as one of my luckier trades, that the market did not tag me at break even. I thought for sure they were going to give me a little bit of a love tap there. I don't know, dare I say the market might seem a little stronger today? Yeah, good question, Steve. Steve's asked, is this first micro macro cross valid? Yes, it is. No longer, though, because now we're into yellow bars, but as this was printing, yeah, everything is in sync. Again, it's counter trend. So I think for the extra tick, I would try to enter below the low of this bar right here, rather than take it right on the hash mark. Maybe give it an extra tick or even two. And then, of course, you need to cover the trade up above the high. But the yellow bar has spoiled that first micro macro cross. So we're starting to get a little bit of indecision coming back into the market. We're starting to flip-flop a little. You can see here our Falcon working on a possible trend change signal to the short side. So we are conflicted. This whole 5312 area is going to be quite influential. Looks like the buyers are starting to dig in again at this zone, or trying to anyway. Nope. Starting to lose their grip. Here's our first in-sync eagle signal today. So we've got a green bar sell. So the eagle suggesting we're going to see prices drift. Clayton says, I'm in this trade, so have good thoughts. All right, Clayton, we're pulling for you. Good thing I can understand your typing, Tony. Tony, reminding us new home reports sales came in at the top of the hour. So that gave the market maybe that little bit of a boost, a little bit of an uptick, enough for me to find my profit target anyway. All right, while we're waiting for that, David asks, when you have time, I have the Raptor only. Can you give insight why you would use 4 different chart systems on one market? So why would you follow the DTS instead of just following one market? Well, the Raptor was actually first designed because we had traders saying, hey, listen, I'm trading off my laptop. I don't have a lot of screen real estate. Can you condense everything into one chart? That's really where it stemmed from. And because, you know, some of these people would like to maybe split their monitor, and they'd have half their monitor they'd like to watch whatever, the E-mini, and the other half they would be watching gold or crude or whatever. So you see, Adam listens. He doesn't listen to me, but when you guys send him emails and say, hey, Adam, can you do this? He listens. So that's actually how the whole Raptor trading system got started, is Adam and Ben and everyone put on their thinking caps and said, okay, how can we get this 3-chart system onto one screen? And that's how the Raptor was born. So the Raptor incorporates elements of the Hawk, the Falcon, and the Eagle all into one. When describing the Raptor, I always use the analogy of a hybrid car. You know, you've got your Prius, it's a car, it gets you from A to B. But a Prius is not a Corvette. And a Prius is not a Ford pickup truck. Does that mean a Prius cannot go fast? Well, yeah, you can go fairly fast on a Prius. Does that mean a Prius cannot haul your bookcase from, you know, one house to another? Well, I guess it depends on the size of the bookcase. So the Prius does the job of the Corvette and the Ford pickup truck, but maybe not as efficiently as the Corvette and the Ford pickup truck. Your Hawk Scalper, your Falcon Swing Trader, and your Eagle Trend Traders, those are the more specialized tools, if you will. These are your Corvettes and your Ford pickup trucks. So it's a little bit more hands-on. It's a little bit more, I don't want to say complicated, because complicated is the wrong word, but uh, a little bit more in-depth maybe. The Raptor allows you to let the programming do most of the heavy lifting for you. You're just watching the one chart. You can watch 2 or 3 different markets, and you can just follow the signals as they progress. The DTS system gives you maybe a little bit more flexibility. Here on the Raptor, we did get the cloud crossover signal right here. I know it did not print, but that's, again, because the clouds are not fully crossed over. We will get a signal that prints when the clouds fully cross, but you can see that it is still a cloud crossover, kind of an early cloud crossover. Let's call it that. So when this signal printed, that's when the Eagle signal printed. So it's not like you're missing a signal, right? The Eagle signal prints the same time that signal prints. If we go back here in the Raptor to the Falcon trade that we took, here's the Falcon. Is that the one? 635. Here's the Falcon trade that we took. And you can see the Raptor actually got in earlier. Now, if you ignored the signal that came pre-market, here was your second number 2 signal printing right here. So it's the same signal as the one that we just took here on the Falcon. And you're going to see that happen over and over again. See, now we're getting a cloud crossover signal forming. The Hawk just produced a first micro-macro cross signal. So you see how it's blending all those signals in together? So, like I say, I suppose the major difference is just that the 3 separate tools break things up. They give you a little bit more, a few more options, let's put it that way. Okay, they're starting to show some support here again. What's with that? Clayton, you might want to think about bringing those stops in a little bit closer. Maybe not quite to break even just yet, but certainly I would consider rolling here to 53.18. What's going on, or you could do break even as well, but what's going on is we've seen this rally up, right? Now, what we might be witnessing is a test of the extreme. So this morning's market was a little bit more bullish. That kind of gives the market a little bit of a bullish bias on the day. Now the market is trying to recover the downtrend, right? The downtrend from yesterday and the overnight. If they fail at this point, we might see a resumption of the uptrend. Now they haven't failed just yet. You know, just having 1 or even 2 bars move against you does not a trend reversal make. However, it is starting to look a little bit stronger, isn't it? That's certainly low enough to be considered a decent attempt to recover the trend on the part of the sellers. Or pardon me, the buyers. And it might head lower still. You know, Clayton says, I looked at what happened as a counter trend, and yeah, that I can see that. So Clayton says, I considered this move the counter trend move and this move the trend move. This first eagle signal does have a way of working itself out and may still get there. Oh, way to go, Clayton says, I already got my $40 profit. I'm good. David writes, so I've tried 2 or 3 markets on Raptor at once. I've got 3 monitors, and it's just too much for me to follow. That said, I'm thinking of staying with one Raptor chart on a market, and that's it. And I think that is an excellent idea, especially when you are starting out. You don't want to make things more difficult than they need to be. And you first need to learn one market. You really do. You just need to get in there. And even though the signals develop the same across the markets, there are little nuances and stuff that you'll learn with the markets that you follow. All right, so let me clear this off. Okay, it's too bad that wasn't a green bar sell. I might have looked at buying above there. Okay, the Eagle right back now on the hard edge. The Raptor also at the hard edge. The Falcon already a little bit more bullish, working a possible trend change signal. And giving us a possible retest here as well. So we might see a number 2 develop if we get a rally out of here now. Unclear at the moment. Whether or not they're going to try to head higher or lower from here. Pretty balanced overall. These yellow bars on the hawk also kind of hinting maybe another push up, maybe. We're trading near yesterday's lows. That's probably why we're getting so much support coming in here at this 53.11, 53.12 area. Jeff says, my Raptor chart froze. Falcon chart's working fine. Any thoughts? You can try this. If you have an open trade, hopefully you don't have an open trade, try reloading your NinjaScript. And if that doesn't work, you can try reloading all historical data. Usually reloading the NinjaScript will reboot it, though. Ooh, you have a, Jeff says, I've got an open trade. You've got an open trade on your Raptor chart? The one that froze up? If you do, you're going to have to manage it from your control panel. Or flatten it. Go to your control panel, and you can go here to your flatten everything, and that will clear all your trades. Okay, good. Jeff says I can manage it from the Falcon. Good. That brings up a very good point, though, is you should always have a contingency plan in place for, what if my computer hard drive crashes while I'm in the middle of the trade? What if the power goes out while I'm in the middle of a trade? At the very least, you should have a fully charged cell phone with your broker's phone number in it. So you can call the order desk and say, please flatten my position. I'm currently long from this, another good reason to keep a trading journal. At 6:35, I bought the NASDAQ at 53.11 quarter. Please flatten that position. Here's my ticket number. Tom asks, Eric, what is meant by flatten the position? Yeah, that's a little trading lingo. In the futures, it's very often is confusing to people, especially if you have a live summary on your trading account. Because in futures, unlike shares, we don't give back what we've bought. So let me use an example of shares. If you bought shares in XYZ company, you own 100 shares of that company. You actually own part of that company. If you want to sell your shares in XYZ company, you literally sell your shares back. So you sell your 100 shares, now you have 0. If I buy the NASDAQ, if I buy a contract in the NASDAQ at 53.15, I have contracted with someone to supply the NASDAQ at 53.15. Okay, I should actually use the physical commodity because it'll make more sense. Let's say crude oil. Let's bring crude oil over here. Or gold. Gold will work too. Okay, so if I buy gold at 12.58 and I sell gold at 12.60, that makes sense to most people because they think, oh, okay, well, I physically bought gold when it was worth 12.58 and I sold it when it was worth 12.60, but I didn't really. I bought a contract to buy gold at 12.58, and then I sold a contract to supply gold at 12.60. I get to keep the difference between the two prices. I get to keep the $200. Now, like I said, if you have an open platform, I don't think they do this as much anymore, but if you have an open platform and you think you're out of your position because your trade got filled at 12.60, your contract got filled at 12.60, and let's say gold keeps going higher and now it's trading at 12.61.50, this contract is going to be recording negative numbers. And right away you'll get a cold sweat and a lump in your throat and you'll think, am I losing money? Well, yes, you are. You are losing money on this contract, but you're still making more money on this contract. So when the two contracts settle at the end of the day or flatten, you will still be ahead the $200 difference. So that's the primary difference in the futures markets versus other markets, is that we are entering into contracts to buy or supply at specific prices. And at the end of the day, those contracts are all settled. They're flattened. So if you hit your flatten all button, that will automatically offset all your positions. See, that's another word we use. We use the word offset. Because if I bought and I'm long, to offset that position, I have to get short. If I do the reverse, if I'm short, if I'm looking to sell something, to offset that position, I have to buy it back. It takes a little bit sometimes to wrap your head around, but it's not that foreign of a concept. If you've ever invested in real estate, Oh no, sorry, real estate's a bad example. Um, because real estate you buy low and you expect to sell it high. Um, oh, okay. Well, futures, because futures are in the future. Let's use an example of something a little bit more far out. See, so this is April gold. This gold contract expires um, end of March sometime. So if you think gold is overvalued, if you think 1257 is too much money for gold, and you think, oh yeah, by April, gold will be trading back down around 1250. You can contract to sell gold at the current price. We'll just throw a stop loss up there, hoping that before this contract comes due, you'll be able to buy back gold at 1250. And you'll be able to keep the $730 profit. So you sell it now while it's expensive in hopes that you can buy it back at a cheaper price and keep the difference between the two. Oh yeah, see, there you go. David gave me a good house example. Way to go, David. You must have a real estate background. David says, you sell someone a house for $200,000 and you try to buy the house for $175,000. So you've already found a buyer for the house, and you go to the homeowner and you try to buy that house for $175,000, and you keep the difference. You keep the $25,000 difference. Yes, that's true too. Thanks, David, for reminding me. David says that when your computer freezes up, your stops actually go to the brokerage. So even though the stops may not be on your screen anymore, you still have active stops in play. And those targets and stops will be used at the brokerage. So yeah, you're right. I guess you don't need to totally panic if, a tree falls through your house and you lose all your power and your computer goes down. You don't need to go scrambling for your cell phone and say, flatten my position. You will still have your stops and targets in play at the brokerage level. Yes, Tom. So Tom says, so then flattening is just clearing your trades. Yes, it's getting you back to zero. You're flat. And speaking of flat, that's what we got for our market here this morning. It's just bouncing back and forth. Good question, Jeff. Jeff asks, is that true for all brokers? I think so, because when the trade manager was developed the very first time, it was on your computer only, and then they've refined it to send the orders to the exchange, to the brokerage itself. It wouldn't hurt to follow up with a phone call, though, just to make sure, because it's a rather unpleasant thing to wake up the next day and see that you're down, whatever, $1,000, $2,000, and you think, oh, how did that happen? Oh, I see. I thought I was flat, but I really wasn't. I thought I was even, but I really wasn't. It's not a fun way to start the day. Yes, Tony took great care there for typing this next comment. You do get an A plus. Tony says, since it's Friday and near lunch, I think the guys are leaving for the weekend. And we'll see the market move sideways. It's possible, you know, it was a pretty big move lower yesterday. Their reluctance to continue moving lower is making me wonder whether they're going to try to get into that gap after all. Certainly, if we can trade, you know, back above these levels here, I think we're going to see a little bit of a rally. All right, there we go. We got our number 2 signal early here. We got a second chance right here. You got a second push entry opportunity. Clayton said, no one said we had to be psychologists to do this. No, psychologists not. Psychotic, maybe. But psychologist, no. Come on, get up there a little bit. We'll just give you a little bit of a tickle. I'm not going to take this trade myself, but I do think it's going to be a decent little run up, maybe a retest of the high. And if we break that high, well, then we open up a can of worms. Then the market's definitely got a little bit of room to move. Just give it a little nudge. Get up there. Come on. Just a little tickle. There we go. Come on. Get going. Just hemming and hawing too much. Yeah, Clayton says we've had 2 high probability signals that haven't done much. And that's characteristic of a sideways market, right? Whenever you identify that the market is potentially sideways, you're going to get signals flip-flopping without any real follow-through. This was the problem the other day. Gotta go back here. There we go. Like, look at that mess there. So when you're getting a lot of yellow bars printing, you're seeing swing highs and lows that are not going anywhere. A little light bulb should go off in the back of your mind, say, I bet you we're in a sideways market. And when you're in a sideways market, you want to be on the alert for a breakout from that sideways range. Once you get that breakout and that little itty bitty retest, then the market will likely move higher or lower, providing it can stay out, right? So here we had our range. There's the breakout, but the market cannot stay out, and it comes back with a number 2 signal. Now all of a sudden we're looking to short, and we got a decent little move to the short side. And that's kind of where we're at right now. We're testing the bottom end of the trading range. Now it looks like we're going to try to test the top end. There wasn't a lot of structure with this number 1 signal. It's not that it's not a valid signal, but you may end up having to cover the trade way up there. And like I said, the market does seem to have maybe a slightly more bullish slant to it today. Because you're right, the sellers are not following through on their sell signals. Oh, I forgot I was highlighting this trade. Peter asks, Eric, are the open orders always visible in your control panel if Trade Manager crashes? Yes, they are. That is your ultimate order entry system. Before, this is actually a very common entry system for a lot of brokerages. Before Trade Manager and before even NinjaTrader's what do they call it, ATM stop or order system that was in the right margin, the only way you could enter an order was to go NASDAQ, order type, stop, quantity, enter your price or your stop price, day order, account, and then it would hit your buy or sell market buttons. Needless to say, it was not very user-friendly, or it is not very user-friendly. But yes, they will be on your control panel. While we're waiting for that to work out, Tom, always full of good questions, asks, what does the Trade Forecaster show? Okay, so the Trade Forecaster is this tool. I happen to have it on the Eagle chart. You can put it on any chart you want. The Trade Forecaster does pretty much what the name says. It tries to forecast what not only the current market environment is, but what the next one is likely to be. So right now it says we are in scalp mode, and probably for almost another half an hour, after which we should be moving into trend mode. All right, how is that helpful? Well, when the market is in scalp mode, as we are right now, we tend to see less follow through on the signals. We tend to see more pullbacks, more stronger pullbacks, which is, again, what we're witnessing. Right? We're getting less follow through, we're getting deep pullbacks. So what does that mean for you as a trader? Well, when you're in scalp mode, it might be a good idea to take profit on target, maybe run a deeper stop, because you recognize the market's going to be whippier. There's going to be less follow through and more chop. When the Trade Forecaster moves into trend mode, which is the other extreme, the opposite is likely to happen. You're likely to see a little bit more follow through. You're likely to experience a little less chop. And what that means for you as a trader is that now you can, maybe you want to put a runner in play. Maybe you want to try to run a tighter stop because you're not expecting the market to be quite as volatile. Swing mode, which is the last one, kind of falls in the middle. You can expect a reasonable amount of follow through on the signals, but that doesn't mean you may not take a little bit of heat first. So you kind of need to balance the two. But like every tool, they are tools. They're here to help you with your decision making, and that's really your ultimate goal, is to be able to make a decision. I know you think your ultimate goal is to make money. Really, it's not. Your ultimate goal is to be able to make a decision. Once you make a decision, then you can worry about the other two things that are going to make or break you. Namely, how am I going to manage this trade now that I'm in it? And how much of my capital am I going to use on this trade to maximize my earnings, but also to protect myself in case I made a boo-boo? Clayton's looking long at 53.25. Ooh, Clayton's got a big bracket order going. Well, he's looking at bracketing the upside anyways. So he's got this zone here. He's looking to buy a breakout above the high of the trading zone. Hey, way to go, David. David's already long at 53.16. Good for you. Clayton asks, only on the upside, what do you think? Okay, I will give you my opinion, but please remember, this is only an opinion. The only opinion that matters is your opinion. I don't have some sort of crystal ball or insights to the market that you don't have. We all have the same tools. One thing I do have is some experience. A good trading friend of mine told me a long time ago, never trust a breakout. And I argued, this was when I would argue more. I don't argue anymore. But I argued with him, and he said, no, Eric, you never trust a breakout, because what happens is the market will just break out the high, or the low, as the case may be, and just break out there enough to pull in a bunch of buy orders, and then it will reverse back and do the same thing on the flip side. This is a ranging market. He said, and he's the fellow who actually brought this to my attention, he said, what you want to do is you want to let the market break out, and then you would like to let it retest and prove that it can stay out of that trading range. Then you look to buy. And I said to him, but what if I miss the big breakout move? What if the market just goes and goes and goes on without me? And I'll never forget what he said to me. He said, so what? And it's so true. Yeah, we get bent out of shape. And honestly, Clayton, I would expect the market to rally if it got above 53.25. But there's also a very good possibility that it's going to try to retest and give you that second opportunity to get in. And if it bolts from here and goes on without you, so what? There's always going to be another trade. See, what happens when the market goes sideways as well is you get traders who buy on the breakouts, right? And then the market starts to go against them. And now they're scared for their position, right? The market goes down, and then it starts to hits the bottom end and it starts to go up. Now the guys who bought here, they are so scared about their trade that all they want is to get out at break even. Meanwhile, you have, well, I'm just going to call them the smart money. They're really not any smarter, but in this instance, they're a little smarter. You got the smart money who is buying the support down here. All right. So the market starts to go up. These guys who bought down here are starting to see a tiny little profit. They see the market getting back near these highs, and what happens? Well, they say, okay, we've got a tiny little profit. We're back at some resistance. We're going to get out of our position, or at least part of our position. let's say they bought 10 contracts up here, down here, they may choose to take profit on 5. All right, so they're starting to sell some of their contracts to offset their position again. What about these guys? What about these guys that's bought up here and sweated the trade all the way down here? Do you think they're thinking about profit? No. Most of them will be saying, oh my gosh, I can't believe I got a second chance to get out of this market. I'm ditching this stupid trade that I did, and I'm just going to get out at break even. So they start selling as well. Guess what happens? Market starts going down again. And this cycle repeats over and over and over, because not only do you have the buyers doing that down there, you've got sellers doing the exact same thing up here. So you've got people who sold down here looking for a breakout who are now panicking about their trade, and you've got the smart sellers who were selling up here. And now you're back at a situation. These guys who sold here are realizing a profit. These guys are just happy to get out at break even or a small loss, and all of a sudden a bunch of buying comes back into the market. And this will continue until sooner or later the market conditions will change enough that the sellers will start getting more aggressive on their selling, and they're going to start selling here instead of waiting all the way up there. And they're going to start selling early. Oops, hit the wrong button again. There we go. And now all of a sudden the market will do one of these. Well, what do you think happens when the market gets down to here? If you said the buyers are going to start buying, you're absolutely correct. What if the market gets down here? The buyers will start buying again because they start to see value. Hey, look, we can pick up the NASDAQ at 53.04, and we were just, a few hours ago or days ago, we were paying 53.24. This is a bargain. Then the market does one of these because the buyers start to get very busy. They see value down here. Then the market will come up, and then the sellers will overwhelm the buyers, and now we have a trend. But the danger of just buying a breakout higher or lower is that you don't know whether that trend is for real yet. You don't know whether that breakout is going to stick. So you may end up being this guy right here, and goodness knows I've been that guy plenty of times, where you buy the breakout looking for the market to rally, and all it does is go back into the trading zone. And now you're sweating the trade because your stops are down here, and you're hoping and praying that they're not going to get just low enough to tag all the sellers so that you have an opportunity to actually start rolling your stops up and maybe get a break-even trade or a small loss before the market reverses again and tries the whole process over. So it's that's why markets range for so long, and that's why breakout trades I shy away from until we can get that breakout and a retest. Then I'll look for the signal. And like I said, if the market bolts and moves along without me, okay, so what? If the market bolts and it moves much, much lower, very, very quickly, what's going to happen is that in, well, a couple hours, a couple of days, the market, believe it or not, will retrace sometime in the future. You're going to see prices come back here. Like I said, it may take hours, it may take days, depending on your time frame that you're watching. The market will come back and retest, And when it does, you will get that second opportunity to get in at exactly the same price. Yes, you may have missed this portion here. You'll get another chance at it. That's why, as a trader, you should never really do anything from a position of panic. It's a bad place to be working from. Yeah, Clayton says, Psych 101. Yeah, that's right. Well, it's human nature. Nobody wants to be wrong. But they're stuck sideways. There's no follow through here today. Look at how long it's taking for these bars to print. My goodness, this signal printed 7:44. Here we are 20 minutes later, and we still haven't found our profit target. All right, see you Monday, Clayton. I think it's almost time to wrap things up anyways. We're going to see a little bit of a rally here. I think we're at least going to find our profit objective. Steve says 53.21 is the top of the Bollinger Band, a perfect place to reverse course on a range day like today. Yeah, maybe. There too, I'd like to see the reaction if you're somebody who likes to follow Bollinger Bands. Your DTS and Raptor systems can take it, but you're going to want to wait for confirmation. Don't just short because we're at the top of the Bollinger. Now, if you see a reverse, if you see a downtick, yeah, all right, you'll probably see a little bit of a retrace. All right, so we've hit our profit objective there. Hooray for us. Market's going to test the 53.25 area. We'll probably see a little bit of a rally once it breaks through there, and then maybe get that retest that I've been harping on all morning. Oh yeah, way to go. Tony says we got a late filter entry signal here in the Falcon as well. So the trend line not changing color, the filter going out of sync, back into sync. Very, very important. And we're working on getting to our profit target there as well. All right, gang. I'm going to close up shop here for the week. Have yourselves a wonderful weekend. And we'll see you on Monday. Yeah, Steve says, if you went long on the Bollinger, you can use it as a profit target. Absolutely, Steve. And I certainly don't think I'm knocking Bollinger Bands. I'm not. They're great tools. Like I say, any tool that you choose to add to your DTS system, that's fine, so long as it helps you make a decision. You're good to go. The last thing you want is something to cloud your decision making. We got enough of that already. All right, folks. See you Monday. Bye for now.